What's up, traders, and welcome to another StockX post-market recap. In today's session, we're going to be teaching you guys how to trade FOMC like a boss. We completely crushed it this FOMC with multiple SPX plays, with multiple winning swing trades, and it all comes down to the guidance and understanding what type of market structure you are dealing with. Now, starting off in our market structure room, which is our war room, we give the daily levels, going over bit and pieces about what's happening in the market, what's moving. Pretty much, we started off the day seeing that the energy sector was slightly down, oil and gas commodities is down, financials is flat, and tech sector was pretty much a leader. It's important to talk about the current market situation prior to the market opening because you want to see where the strength is. You want to understand what the trends are. Every report discusses that, so we start to see trends, because when you start to see consecutive movements, let's say in techs or in oil and gas, you want to investigate what the reason behind that is, and that's going to be very crucial to know moving forward. Now, the next point here I want to make is we talk about the call gamma here. I mentioned it's slightly different, and we mentioned that the main trading range is expected to be within 6360 and 6400. Okay, so if we go over our SPX map over here, majority of the trading day before the FOMC happened was primarily within the 5630 and that particular range, okay, that we called out. So that's very interesting to see here, 6400. And I mentioned over here that if SPX is not able to get above 6390, there likely be more chop and downside will persist. Under 6330, you're likely to see 6330 and 6350 range. This was key, okay? So you want to keep that in mind. I said if SPX goes below 63, gets below 6360, you're likely to see this. Okay, this is why it's very important here, and it also matches what we have in our SPX map over here as well. Okay, so slightly under this, you're going to see that bearish breakdown right over there. Okay, so very crucial to go over that. We gave our prediction edge to the downside based on distribution. Boom, that was right on. We did see the edge to the downside, and we also see that the bullish gamma has gone down. But of course, the overnight move is completely different now, okay? So first way to trade like a boss on FOMC is you join our room and you get access to this report, okay? So that's pretty much it. You want to first make sure you understand the market structure, okay? Next, what we will be doing is describing you how we traded like a boss, okay? Is the first thing we did is we have multiple swings in this market here, okay? So we decided to take profits on our meta puts right at the open, which is a great thing. I did that. And I mentioned here that I would look to roll into a meta put later. I didn't like the premium, so I pretty much left it. We didn't end up doing that. But nice 65% win on that particular play. We didn't get a fill on this SMCI at all. Kind of had a feeling. But the first trade that we took today was the IWM 223 puts, okay? It was the only trade that was under $1 at the time that I was willing to hold. Now, this trade, and I don't lie to you guys, I don't ever lie, was down 60% before it ripped over 200%, okay? I told people numerous of times, do not sell this. This is a trade that you must hold through the end of the day. Expect zero on these because FOMC could change things. Usually IWM becomes very bearish. So what really killed our premium was when IWM started to pop a little during the AM. So it pretty much just went over here. As soon as it got here, that's when we were down 60%. But I wasn't too worried because my inflection point on IWM was right around over here. Okay, so that's what we were looking at, and we managed to make a nice profit off it. It did go up to 200%. I sold it for 100 something percent, but that was key. Okay, So our NVIDIA premiums 180 look very nice. I told the team that at around $2, that's where the hard point was. Unfortunately, I decided to sell my NVIDIA 180 calls only because I wanted to reduce my risk in my holdings. And I was considering jumping in again. This is my second NVIDIA trade, so I'm not really mad. This week we banked off AMD, we banked off NVIDIA. So we played the semiconductors very right here, but we took this profit. It was initially a roll, and we're looking forward here, okay? And we decided to take a risky play with CoreWeave here. And the reason why we did that is simply because CoreWeave, it was pretty much near our estimated weekly low, so it did move a little bit below. But I saw the call premium start to spike when the stock wasn't moving, and then I mentioned that on Twitter that this thing is gonna start to move. And going into my Twitter page over here, if you guys are looking, we can see exactly where we called that point out, right? So this is kind of important to understand. When we start to see premium spike, then that's when we start to really notice that, okay, there's something going on here. And considering that we had catalyst as well, then we basically know it will be a great opportunity. So I said 110 target, and it's basically there. So let's see if it's gonna hit there. 110, boom, we got that right on the money, and we will post about that. Okay, let's do that on the live. Okay, we put a little green check mark just to be a little more extra. Okay, so now that's done there. We hit our target. Our 110 calls that we had are going to open at around $3 if it holds there. So that's pretty much more than 3x, okay? Because the premium was spiking. We knew we had news, okay? And on top of that, guys, as well, is that we were bullish on cloud. We still are holding our oracles. This thing was up multiple times. This is my second entry point. When I first had these, I sold it for 100%. I got back in on the dip, and then it went up 40-50%. It went back down. I didn't sell. We held it through, and now these are going to be depending on where that is. Let's see where Oracle is right now. 255. So those are going to be potentially going to $10, okay, from $2. So another banger room in the play here, in the room here, okay. So the first SPX play that we took was SPX right over here, and that was basically a 70% trade here, okay. So the reason why we decided to take the puts here is because Fed Powell's commentary didn't sound so good here, okay. So we decided to take it at, I don't recall at what moment, but let me see right over here. It was more of a fast trade. Some people did jump in, so I bought it over here as a lotto, and it moved pretty fast, okay. So people did end up getting that put, and the reason why I took it here, just to explain to you guys on a technical level here, was the S&P 500, and this is when we start to get in at around 240. So what we had noticed is that this pop on the 5-minute chart, right, looked pretty decent here. And when the put premiums, let's go to the put premiums on SPX. I'm not sure if they're going to show me here. So we got the 63.60s, right? First of all, we picked that strike simply because of this reason right over here. It's the bearish gamma. We know it's within range. That's number one. You always want to check if it's within range. And we go on our premium chart over here. We look at it from this point of view, seeing if it's going up or down, and try to find an entry point on that particular zone here. So I got that fill approximately, let me see, I don't remember. Okay, so we had it at around 210. Okay, so around 210 is where it had a demand zone. Okay, looking at it from a bigger angle over here, we seen that around 210 was a good entry point, and recognized that Fed Powell's commentary along the way was also one to watch as well. So with that being said, we got in, we jumped pretty fast, made our money. This actually went 200%, but we took our profit because it was a quick play. And then I placed an order to buy 63.60 here. Okay, now trading FOMC, you have limited time because once the meeting starts, this was 15 minutes into Powell's speech. You want to make sure that you don't chase. Okay, sometimes when I do chase, it works out, but chasing is what kills. So we put this order to buy the 63.60 put at 60 cents. It didn't end up filling. Okay, but then we later tried again at another opportunity where we bought the 63.40 puts because the market was showing signs of it was going to be weak. We waited for a green candle to get in. We never want to buy a put on a massive dump red candle, because if you do, then you may end up losing. So we got out of that particular play at around 178%, and everyone's winning here, everyone's happy. Then we sold our puts, our RWMs, and then we got this one over here, 63.30 put here. Okay, the strike matters because in our market strategy zone right over here, our level 3 was at 63.33, and that was the bottom here. Okay, so you don't want to go too far out. When you know exactly where the bottom level is, that helps you identify which strikes to look into. Okay, so we got the 63.30 at around 1.5, managed to get the fill on that, and those ended up paying as well. And then we tried this one here. This was the last one play. It didn't end up working, but it did go up 50% fast, but I'll call it a loser because when I got the fill, you know, it was like very hard to sell. So very awesome play here. We're going to be banking on our core weave calls tomorrow, which is now in the money. We're going to be banking on our ORCL calls as well. And we just been killing SPX. If you guys been following us since yesterday, we also crushed SPX 3 out of 3. We're 3 out of 4 today, which is awesome as well. Okay, so going back into what's happening moving forward. So our NVDA, right, is now at 182, and it's continued to climb higher post Meta earnings. So Meta's guiding higher on their capex, and that's causing a surge here where now it's going to my 185 estimated weekly high. Kind of regret selling my 180s, but it is what it is, and we reduced risk, so that's fine. I was actually very adamant on holding that, and I had a lot of profits this week, but I got kind of shaken out, and I took 70% of that. So we're gonna see that at 185. That's what we're looking at, our top. You can see right over here, AMD rejected our 182 at first, but now it's on the verge of potentially going to 191. So that's going to be our next top zone that we're watching. Broadcom for some reason is struggling here, but that's only because it's on my level 3, which is 303, insanely hard. Can go to 310. Okay, so my levels still have more upside here. Meta is basically above my estimated weekly high 770 off that good earnings. So they pretty much guided higher for following earnings report, which is really bullish. Our core weaves are also up 7% right now. These are going insane. It's very possible that above this 115, it can head towards 125. So I potentially see this going towards 128. Okay, so that looks pretty nice. ARM down bad on earnings, not looking so good. Our ORCL calls are at our level 1 bullish right now. Strong cloud stocks, so we'll see this potentially go to 260. We're holding this as well. So non-stop bangers in the room, guys, and I hope you guys are watching this content here because we share a lot of information on how to set up the right trades We give you the pre-announced stuff, and we're crushing it on our zero OTDs. So I hope you guys learned a thing or two in this mentorship recap lesson, and I'll see you guys in the next one. Also, for everyone, next week after August 8th, I'll be trading in my main studio. I'm currently trading outside of my home. I'm with family at this time, so when I hit back to my main studio here, I should be pretty much having better illustrations of content and more details to come. Okay, so thanks for tuning in, guys. I'll see you guys in the next one, and like always, let's get that money.